What if you could save money into an account where that money would never be taxed? Sounds pretty good, doesn't it? The idea that you could take some of your income before it's taxed, deposit it into an account where it grows tax-free, and then in the future, the money comes out tax-free. That would be what's referred to as a triple taxed advantaged account. And it's a very rare thing. Believe it or not, that type of account exists. It's called a health savings account, or an HSA. And it just might be available to you and to your employees. An HSA is a savings account that you own that's administered by a financial institution called a custodian. For 2020, an individual is allowed to save $3,550. For a family, $7,100. And if you're 55 or older, the IRS allows you an additional $1,000 per year on top of each one of those limits. The HSA account balance carries over year to year, so there is no use it or lose it. And the IRS allows HSA money to be spent for qualifying health care, prescription drug, dental care, and vision care expenses. The money comes out of your HSA and it is not taxed. Your financial institution or custodian generally sends you a debit card to make paying your qualified expenses convenient. Who's eligible to contribute to an HSA? The IRS allows any taxpayer who is covered under a qualified high deductible health plan, also known as an HDHP, and who is not covered by Medicare, and who cannot be claimed by another person on their tax return as a dependent. Unlike other tax advantaged accounts, there is no income limit with HSAs. Those with any level of income are allowed to open and save into an HSA. Here's a couple of other key strategies that might be of interest to you as well. Number one, if it's administered through an employer, an HSA not only saves on federal income taxation, but it also saves on employer payroll taxes and employee payroll taxes. So you can almost say with that, it's a quadruple tax advantaged account. Also, qualifying high deductible health plans, or HDHPs, are generally significantly less expensive than a more traditional plan, allowing employers and employees to take that savings and to invest that or save that into an HSA. If you feel like this concept may be helpful to you or your business, contact your SFP advisor and we'll schedule a time to talk about it. Until then, I'm Daryl Sumner with SFP Benefits, and I'll look forward to seeing you next time on Benefit Minute.